Morning, Mark Chameleons and my main man, Dimitri Pargamonic. How you doing this morning, Dima?
Good morning, Will. How are you?
Great, great. What's going to be the topic today?
So I think what we'll do is go over the earnings calendar, go over some of the highlights and features of the earnings calendar. And if there are any questions along the way, I'm going to try to answer as many questions as I can. But I think one of the things about the earnings calendar that could be interesting, and some people had questions about the earnings calendar historically, that I'm going to try to address today or answer some of the most commonly asked questions. So we'll start with that, see how that goes. If that goes pretty well, maybe we'll continue on the earnings, post earnings calendar, how else you could do some analysis around earnings for different stocks.
Awesome. Well, before we get started, let's jump to the disclaimer.
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to answer your questions, provide you with guidance. So there's the disclaimer.
Excellent.
And here we go.
While you're bringing up the page, I'm going to put into the YouTube chat. We have a webinar at 6 p.m. tonight with Raj, his monthly webinar series. He's a Market Chameleon user, big on the Discord group. So I'll put it in. Make sure you register for that webinar at 6 today.
Yep. And what's interesting, Raj, he's a Market Chameleon user for already, I think, a couple years. And this is an example how an actual member uses the website, because we kind of maybe approach it a little bit differently than some people use it. A lot of people have different use cases, so it'll be interesting. And do you know what the topic will be on? Is it going to be on earnings?
I think he's going to look at risk profiles around trades.
Okay.
Maybe it's the payout diagram tools off the options page. He's gonna focus on that today, how he uses it.
Okay. Awesome. So let's get started. We'll take a quick look at the pre-market report, and then we'll jump to the earnings calendar. So these are stocks trading in the pre-market hours. We have the most active list, biggest percentage gainers, biggest percentage decliners. I'm scrolling down here really quickly just to see how many made the percentage gainers list, how many made the percentage decliners. I see 69 percentage gainers list, 46 on the percentage decliners list. From that perspective, looks like a slightly more bullish bias at the open. Just giving you guys, recap, anybody new, these are, you got the symbols here, the percentage gains in the pre-market. That's comparing yesterday's closing price and what they're trading in the pre-market hours. This is the volume, the market cap of the stock. And if you hover over these little alerts, any type of news or events that we're picking up, we put in there so you could kind of take a look at the headline news. If you click on it, you could go to the full story. But here you see this is reacting to news about positive results of an early stage. So this is obviously a biotech stock releasing positive results from a trial. If we come down here, these are the losers on the day. So if you hover over these news, you could sometimes just from the headline news itself, you kind of get a picture here. It looks like they're going to issue more stock. So as I'm looking at the headline news here, they issued a press release. They're going to issue $43.5 million worth of common stock. Coming down here, again, this one looks like a biotech stock, also reacting to some news because these biotechs, they always have like clinical trials, PDFA. So those are big, catalyst events for that group. I'm not going to go into the specific stock right now to do a deeper analysis. We've done that before. And since we're doing it on earnings calendar today, I'm going to jump to the earnings calendar unless you have questions.
Nope, you can jump.
Okay. So here under earnings, we got the calendar here. And this calendar, it's basically listing upcoming earnings, that are expected to announce. It starts off on the current date, June 15th. You could change those dates, going to the date, or bring down a calendar and then go forward or backward based on this calendar. So I'm going to come back to the default, which would be the current day. When companies announce earnings, that's a catalyst event for that. Sorry, let me just try to close this real quick. But that is a catalyst event for the company, because when they announce earnings, this is new information for shareholders. They could digest how the company did in their most recent quarter and what the management is saying about the future expectations of the company. When they get this new information, traders can put that into their models, reprice the stock really quickly. So you'll see usually more volatility around earnings. So that's why you want to kind of pay attention to when the stock is about to report earnings. So here for June 15th, we have a list of stocks. You can see here, there's a bunch of stocks today. Here's Oracle up here, expected to report today after the market close. So this is AMC, stands for after market close, BMO before the market opens. And usually that's how they report earnings, either before 9:30 a.m. before the market opens, or after the market closes, but not always. Sometimes you'll see something get reported in the middle of the day, but that's not the normal way of doing it. They allow you to kind of digest the news, while the market's not during regular hours, and then you will see sometimes gaps, right? So you'll see after markets trading or before markets trading. Here in RLNX, we see they reported before the market opened, and when we detect a press release for that earnings, we will populate a link here and let you know what time that press release came out. So this is at 7 a.m. If you click on it, you could go and read the press release from the company and what they're saying. So they're going to give you highlights. They're going to tell you about their business. So you can see here, this looks like a biotech stock talking about kidney diseases. These are their financials. Sometimes they'll give you forward-looking estimates, maybe links to the conference call. So this is information they feel is material important in that press release, and you get a chance to go and read about it. And here we also show what time they're going to hold a conference call. So besides issuing that press release, sometimes then the management will have a call and answer questions from analysts, investors, and that becomes very important too, what they say. So it's not just like the number that they report, it's what they're saying about the future outlook of their business. And that kind of becomes even more important than just the results themselves, because you could have a very bad quarter, but there could be an explanation for it. But you may still have a good future outlook, so that happens a lot. You miss expectations, and I'll talk a little bit more about, but when you miss expectations, the stock could be higher anyway, or you beat analyst expectations and the stock will be much lower, because it depends what the management is saying about the future outlook of the company. So when traders, investors buy a stock, they're buying it based on what they think the future outlook looks like, not what they just did, okay? Because you have the history, then you have the future outlook. The reason also this could be important is sometimes the conference call could be in at a different time than when they issue the press release, and you're not going to get the full effect of that earnings until you listen to that conference call. So here, for example, June 15th, you got ATX, they're going to report after the market close. So you're going to get these numbers after the market close. They're going to issue a press release, and you get to look at their revenue, you get to look at their earnings per share, and the stock may move on that news, right? And that's going to be June 15th after the market close. But here, what we're seeing is that they're going to hold a conference call the next day at 10 a.m. So the markets are going to open. So there's a chance for the stock to trade after the market close. There's a chance for the stock to trade at a new price between 9:30 and 10 a.m. 10 a.m. they have a conference call. And in that conference call, they could say something that could reverse the stock. It could go the other way, or it could make it go even further, or just confirm whatever they said. You don't know. So it's almost like there's going to be two events around the earnings. First, you get this press release, then you get the conference call. They both can have a big impact on the stock. So that's why it's trading options, and you're looking at this. The stock opens up 9:30 a.m., 9:45 a.m. Well, you still have a potential catalyst move in the stock depending what happens around that conference call. So let me know if there are any questions so far, Will. I'm gonna keep going through. The next thing we decided, on the calendar, what to put on the calendar, earnings calendar, is you have a lot of different types of data you could put on there related to earnings. Since we are options focused and volatility focused, we looked at what are the options implying the earnings move. So when we look at the straddle is price. You're buying a call, you're buying a put, and that is the expected move for the stock, right? Because the stock has to move by a big enough percentage, either up or down, to cover the cost of that premium for both the call and the put. So that's where you're getting the expected move over here. The next thing we put there is just to compare it to the previous move, just to give you a sense. So here, Oracle, I'm hovering over it. Previously, they reported earnings. You could see day before they closed at $72.12. They reported after the market closed. The next day, the stock on the day was down 6.5%. So you could see that it had a negative reaction. And just to give you a sense of what happened last time, the expected move now 4.8%, and this is in either direction. It's coming from the straddle. You could kind of hover over it and read about it. When the company releases their earnings, if we detect that the company has released their earnings, then we start tracking how the stock is doing until the end of the day. So here, our NLX released earnings is starting to trade in the pre-market hours. So you could see here, this is down 5.5% so far in the pre-market hours. And we're going to continue to track that percentage until the end of the day. So we consider the full effect of the earnings to be by the end of the day. It needs full days of trading, but we track it along the way. So far, down 5.5%. But you could see here, I'm hovering over it, only 200 shares so far traded. So not that much, right? Traded as low as high as 32, as low as 30, based on last trade, down 5.5%, but only 200 shares traded. So you could hover over it and just get a sense, and this is going to continue to follow it till the end of the day, all right? Here, we're tracking the option volume on the day. So for Oracle options, right now, they're not, the markets aren't open, but once the markets open, options will start trading. So we're going to track what the option volume is during the day. So you can kind of see if things are active heading into earnings today after the market close, and you could just kind of even sort by that. And this is the market cap for Oracle. So any questions on any of this? Well,
No, we're good, buddy.
okay. You could also, if you wanted to, just use some of these filters. So right now we're not in earnings season. You don't see a lot of stocks yet populated in here. Once earnings season hits, then you might see hundreds potentially of stocks reporting on a given day. So you could start kind of just sorting things out. You could do stocks in your watch list. You could do by stock price. So stocks maybe over 10 bucks, whatever you want to do. Average option volume. So let's just say you want more liquid stocks. If you're looking for options plays, you could do, stocks that on average trade 5,000 contracts or more per day and filter it out that way. Let me unfilter. Time of day becomes important. And this, we got a lot of requests. Well, if I'm looking for an options play, maybe I just want to look today, what's reporting after the market close. So you could kind of just filter there. So this way you could just see what's coming up after the market close, gives you a chance to do your analysis during the day and look for different types of option strategies if that's what interests you. Also, today after the market close or next day before the market opens. So this is another request we got for this filter. And basically traders said, well, it's the same thing. If it reports after the market closed today or tomorrow before the market opens, it's essentially the same thing because you're going to get the earnings report before tomorrow's opening, but after today's market close. So you have that filter here to look for stocks that either report today after market close or tomorrow. You can see here June 16th before the market opens. Okay, and then start doing your analysis that way. I'm going to unfilter this, and then I'm going to go through some of these tabs up here, and these tabs are coming from other reports on the website that are more comprehensive, but you kind of have like a shortened report here to really quickly kind of go through some analytics. So for example, if you're looking at option premiums and you want to compare, well, how does Oracle's estimated move, right, today compared to the historical 4-quarter average? So we could take a look at the last 4 quarters. How did the stock tend to move up or down in absolute terms? So we could see here Oracle on average up or down 3.7%. The smallest move it made in the last 4 quarters was 0.6%. The biggest move it made was 6.5%. So right now we're expecting a 4.8% move based on the straddle. So really quickly, we could just compare this expectation to the average, and we see that's 1.2% above the 4-quarter average. And again, if you want to go to a more comprehensive report, you can, but this is just kind of a quick starter report just to filter a few things out here. You could also just sort this for expected moves under the average or over the average. And these are for people who like to play the earnings move, right, the straddle. You could also go to 12-quarter average. So this expands the database. The data set. So this now looks for 12 quarters instead of 4 quarters and gives you a sense. Again, let me just sort this by market cap. So here we have Oracle, the 4-quarter average move 4.9%, with the high move 20.4, low move 0.2. If we compare it to the 12-quarter average 4.8, we see that's more in line with the 12-quarter average. Okay, expected move 4.8, 12 quarters average move 4.9, so a little bit below that. So that's looking at the earnings move. We also have potential option play opportunities. So we put it over here, today's opportunities. And this is looking at stocks that are expected to report earnings coming up on on the calendar that are actionable today. And what it's doing is it's defaulted to defined risk strategies like spreads, calendars, diagonals, vertical spreads, calendar spreads, butterflies, iron condors. And it's looking at historical, first of all, a historical back test of these strategies to see how they perform in the past. So you could see here, HRB, a diagonal call spread. If we took the last 12 quarters, if you click on it, you get the data. You get the data for each 12 quarters. You could open up, see the options chain before and after. It tells you here which strikes it used, right? And the expirations. So I'm going to come back here. So based on the last 12 quarters, this spread initiated day before earnings, after, and taken off day of earnings at the end of the day, was a winner 83% of the time for an average return of 17%. This gives you quickly a Sharpe ratio, basically dividing the average return by the standard deviation of the returns. So the higher this is, the better. And this is a back test of the historical strategies. The next thing, what it does is go to the options chain, goes to the current options chain, and looks at the options chain, and it compares, well, how do the option prices line up right now? And then it does a distribution of returns, creating a theoretical value based on the options chain. So it'll look at today's prices and say, well, using today's prices, how historically, theoretically, how would have this turned out, profitable or unprofitable using today's prices, right? So historically, maybe the prices were very cheap. If the prices today are very high, then it may have not worked. So that's the next test, is saying, okay, we use based on historical prices, this is the outcomes. What if we apply today's prices to the historical outcomes? How would have that looked? And then it compares the current market to a theoretical value and sees if there was any edge based on that. Okay. And if you hover over it, it'll tell you which strikes it's using, which expiration, and which side. So here, I'm going to just kind of click on this, June 18th. Right, and it's populating the strategy for me. So we went to the HRB options chain, and it went to the June 18th expiration, which is going to cover earnings June 15th. And it's looking at selling the 26 call. And sorry, this is a calendar spread actually. So it's looking at the June expiration and July expiration. So the first leg it's looking at is selling the June 26 call over here, 55 cents. Okay. And then going out the July expiration over here, July 27 call, 50 cents. So you're selling this one, buying this one. So I'm going to load that strategy. So this is what it looks like at expiration, assuming that it's looking at the June 18th expiration, because this is a calendar spread, and it's assuming right now that the July 27 call will be at the same implied volatility at expiration. So you could change that here. We could change that assumption and say, well, we think after, the earnings, after earnings are released, this will fall down to 25 implied volatility, and then you could just rerun that strategy. Okay. Any questions on here? Well,
no questions. The Mike, the mayor of the Gulf Coast, who's super happy that you walked through this. He has not thought about the earnings calendar a while, and seeing you go through it is super helpful. Thank you.
Okay. No, thank you. So here, just a couple highlights while we're on here. We're looking at, this is the credit if we're doing it on the markets. This is the market in this strategy, 5 cents bid, 20 cents offer. The midpoint is 0.13. This becomes important. You don't want to trade too far away from the midpoint. The further you go from the midpoint, the more fee you're paying to do that spread. Okay, so it's the closer you are to the midpoint, the more you are to that fair market value. Okay, the further you go, the more you're like paying a fee. So that's something to keep in mind when you're doing these spreads. Let me come back here. So we went over these 4 tabs. I guess I'm going to stop here, Will. We could go, if you want to look up, if you just want to look up a symbol quickly, you could just press it in here and say, well, I just want to see Apple. When is that coming up? You press Apple. So right now we're projecting. They didn't announce the next date. So these are the projected dates going out, 4 quarters. And here are the historical data points. So you could see when it released the last time, after the market closed, when they had the conference call, what the stock did on the day. So you could hover over it. So the Apple that day, basically, at the end of the day, it was unchanged. The expected move heading into that day was 3.8%. So this is a way for you to kind of just, if you're looking for a specific symbol while you're on the calendar, you can do it this way. I'll close it. Again, the Twitter, same thing. So here they have an announced date. So July 22nd, they're going to report after the market close. They're expected to have a have a conference call at 6 p.m. That's for their second quarter. Right now, the Stroud is implying 13.7% move. So that's really quickly just to look up a specific symbol, and you get a history down here of how they did in the past and what the implied move was heading into earnings. So hopefully that's helpful. We're right up next to 9:30. If there are no questions, I'll probably just stop here.
That's perfect. We did have a question, market related, if you want to take the last 3 minutes and maybe add your 2 cents. Maria was asking, and I know back in the day, the witching Fridays with options, futures, everything firing at the same time were maybe a bigger deal because there were more arbitrage opportunities. But do you have any thoughts on the witching Fridays, the quad? I think it's quad witching now, triple witching days.
Well, I'd have to take a closer look. I'm not exactly sure, I'll take a look if it creates more volatility. But as far as like arbitrage opportunities go, the systems in place right now are very efficient, and there are a lot of systems in place to exploit any type of arbitrage opportunities to the penny or fraction of a penny, and they do it very quickly. It's at lightning speed that for markets to get way out of line, I think would be, surprising to me.
Yeah, I agree. I think any opportunities for like a retail
market
investor to try to do something are not there anymore. I mean, it probably leads to more volume. I don't even know if it leads to more volatility, but it was. Yeah. Things have changed so much in our lifetime. I mean, when you think about expiration Fridays 20 years ago, right? You would spend hours after the close settling all your trades, waiting around to do things, where now everything's settled in an instant. It's
and the systems are very linked now, for at least for arbitrage opportunities. I'm talking about strict arbs or very close to strict arb. Those those things have been already traded to the point of like, where the 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 differences between the markets should be very very minuscule at this point. Um, there are opportunities when it's not strict, maybe like related products, those could start moving more apart. Because when you have the more risk you have, then the less people are willing to do those. But strict ARB opportunities, I would be surprised if you see anything, of any significance. And
I would
if
agree.
if there is, it's going to be exploited very quickly. You won't even be able. It won't even be enough even for you to see it. You won't be able to eyeball it. It would be gone by the time your eye would see it.
Awesome job, Dima. Thanks so much for refreshing us on the earnings calendar.
All right. Thanks, everyone. Thanks for joining us, and hope to see you guys tomorrow. Stay safe out there. Have a good trading day.
All right. Have a great day, chameleons. Remember, Raj, one of the big chameleons Discord, will be on at 6 p.m. We'll be live. The link's in the chat today, and you'll be getting an email. Have a great day, everyone. Trade in peace. Bye, D.